Well, less than an hour for the economic survey ahead of the budget document tomorrow. You're watching Trading Hour on CNBC-TV18. I'm Ekta Batra and with me is Prashant Nair. Well, it's turning out to be a session where we are going full guns blazing, you'd have to say, into the budget as well as into the economic survey. So currently the Nifty is up around 40 odd points. We have the mid-cap index, which is up around 0.2%, and the Bank Nifty, which is outperforming with a gain of around 0.6%. Lot of stocks to talk about. Remember that today's cheer is also global in nature, considering that the US markets ended at a record high. We had most of Asia, which was supporting us. So that also helping us in today's trade. But a lot of stocks to discuss over the next 60 minutes. Plus, we'll get your heads up on what we can expect from the economic survey as well. Hi, Prashant.
Ekta, hi, and we'll tell you what to expect from the economic survey, and then we'll tell you what you should make of the economic survey in light of the fact that the budget is tomorrow and whether we should sort of take away something. Our colleague Rituparna put out some information about what the economic survey may contain. We don't have to wait very long for that, but I just sort of want to pick up on that one line. This is what Rituparna put out. Economic survey to lay out a 5-year strategy on growth through better savings, investments, IBC changes and exports. So, a lot of people have kind of sort of expressed this, in a way, hope as well that since this is the first budget of the second term of the Modi government, they'd probably look at this budget to lay the foundation for the next 5 years, and in a way just sort of the entire design framework for what they expect to spend on, how they expect to collect and increase tax revenues. I mean, just the overall framework for the next 5 years would be laid out. And at least that is what we're expecting in the economic survey. Will we see something similar tomorrow as well? We'll have to wait and watch. But, I mean, irrespective of that, I think the big thing in the budget, of course, is, is there space for a stimulus? Will the government be sort of willing to do it? How will it be funded? I mean, I think those are the big questions for both the bond market and, of course, for the stock market as well. And both the bond and the stock markets are the opposite sides of this question, as they always are. The bond markets would like the deficit maintained, and the stock market would like some more deficit spending. I mean, editorials upon editorials sort of arguing for that. But we'll find out whether Nirmala Sitharaman does that or not. Yeah.
Prashant, I just wanted to actually talk about this because it is interesting. When you heard Mark Mobius talk earlier in the morning, he did mention that, it's okay if you let go a little bit on fiscal deficit. And we heard the same thing coming in from Goldman Sachs as well yesterday, where they said that, we're definitely better in terms of fiscal deficit as compared to our emerging market peers. So there is some amount of space for us to probably exceed when it comes to fiscal deficit. Remember, this is two FIIs, in fact, talking to us about the fiscal deficit on 2 consecutive days, highlighting that maybe a little bit of a slip on fiscal deficit in order to push growth would be something they would be okay with.
Well, we'll see. I mean, stock markets like more spending, no doubt about it. It means more money in the system. But, well, that is not what the bond market's like. Sudarshan Sukhani, Resto Analytics, is joining us right now. The economic survey has been tabled in the parliament. So, there's a bit of a gap between when it is tabled and when we are able to get our hands onto the document. But the government has tabled the survey.
It's supposed to probably come in real time as well in terms of details.
So they upload the document online on the government
they're probably
website.
Going to get, so they predict 7% GDP growth in FY20. So those are a couple of details which are coming in. So FY20, they're estimating around 7% GDP growth. We'll get you more details in terms of what the expectations are. In terms of, at least they're expecting a pickup in terms of the GDP growth for this fiscal in particular. See higher FY20 GDP growth on a stable macroeconomic condition. So that's another statement which is coming in, particularly for GDP growth. I think we have Lata with us to just give us a sense in terms of at least these 2 statements that we're picking up. Lata, over to you.
Well, not really very dramatic. I think much of the excitement stemmed from the fact that the fourth quarter GDP number for FY19 came in at 5.8, and therefore the entire FY19 number itself came in only at 6.7. So the fear is that we should not have another repeat year. So even 7% is a consolation because that becomes higher than last year's number. I don't see that as changing anybody's opinion. the expectation is that the current quarter, the quarter that ended on June 30th, will be another repeat with a 5 handle. But thereafter, it would improve. Also because agricultural prices have risen, there has been an income transfer, there have been 3 rate cuts, all that obviously work into the economy. But much more importantly, the second half, there is a very advantageous base. On a fourth quarter base of 5.9, an expectation of 7.5% GDP is what economists have been giving us, and that would take the average to 7. So the 7% comes not because the economy is expected to grow very well, but more because there is an adverse base. There is a low base of 6.7. On top of that, it must not be very difficult to perhaps muster in 7%. Well, yeah, we are getting averages of the last 5 years. That is not extremely heartwarming because it's getting highly disputed as well. The 7.5
I'm on the indiabudget.gov.in but there is the FY18 economic survey, right? So it's yet to be uploaded.
There were some statements which came in on MPC as well, but this is on fiscal deficit where they've seen it at 5.8% in FY19 versus 6.4%. No, I think we should just get
No,
that.
I think the deficit may be the combined state center deficit, but even that at 5.8 seems like quite under control if it were, because the expectation is that it's 3.4% for the central government and 3% for the states. So it should have come in at 6.4. I thought the line said a much lower number.
5.8 versus 6.4.
Okay. There is another statement which saying that investment decline has bottomed out and the investment rate will pick up. And an accommodative monetary policy should help. Decline in NPAs should also help push the capex cycle. Now, that's the first positive statements we are getting in terms of growth, that the investment decline has bottomed out. Lower rates, that is rate cuts from the Monetary Policy Committee, should help. And other steps taken by the government should also push up the capex cycle. Political stability should also push up animal spirits of the economy going ahead. Well, those are a clutch of statements. The economic survey is banking on the investment decline bottoming out. Let's get the first studied and expert views on it. We are being joined by Pranab Sen, former chief statistician and former chairman of the Statistics Commission. Dr. Sen, the survey seems to be indicating we are getting just highlights and tickers from the survey. The survey believes that the investment decline has bottomed out and capex will pick up because of rate declines and income transfers by the government. Would you agree that we are probably going to see at least a resumption of the capex cycle, however weak?
It's difficult to say. My personal view is I doubt it, not at least over the next couple of quarters. And the reason that I say so is that really the corporate capex cycle decline is of relatively recent origin.
Okay.
Earlier the downturn in the capex cycle was being driven essentially by haushhold investment.
Okay.
But the corporate one is new, and I don't think it's going to go away in such a hurry.
Okay. Well, won't you expect the rate cuts to begin bringing back some people onto investments, at least those who manufacture consumer goods?
No, consumer goods in particular are much more sensitive to the state of consumer sentiments than they are to the interest rate.
Okay.
Consumer sentiment, but by all accounts, is not looking good at all.
Okay. Well, now we are getting some numbers on fiscal deficit. Dr. Sen, do stay on. Quite clearly, the economic survey is saying that the general fiscal deficit for FY19 is seen at 5.8 versus 6.4 in FY18. I'm not able to get my head around this calculation. I was under the impression the state's fiscal deficit, if anything, was higher, and 3.4 of the central government would have given a 6.4 in FY19 as well. Soumyakanti Ghosh, Group Chief Economic Advisor at State Bank of India, has joined us. Soumya, this sentence, can you make sense? General fiscal deficit for FY19 seen at 5.8%?
No, I think this is... I think the RBI has estimated it at 5.9%, the consolidated deficit for the center and state. So I think that is in line with that number. So
Okay.
whether this number will be revised upwards is a matter of debate, but this is in line with what the number which has been officially also released in the RBI document, I think in one of the policy statements.
Okay.
So from that point of view, I think there could be an upside bias to the number, but this is what the official estimate states as of now.
Okay. What's your sense about the capex cycle, Soumya? The economic survey's reasons are that the decline in NPAs should push up capex cycle. Accommodative MPC policy should lower rates shortly, and of course, political stability should lead to a return of animal spirits. Is this making a convincing argument? Do you think capex will pick up?
Capex, I think as of now, the banking sector stress is, I think, towards the fag end of the cycle. So that is the one positive part for for any pickup in investment, if any, which happens the following. But my sense is that the pickup in investment might take some more time because there is uncertainty still around, and the first quarter of the current fiscal, also the elections were there. So I think so that nothing much has happened in the first quarter. Second quarter also, I think 1 month has, I mean, we were just into the first month. And my sense is that is only in the second quarter, that the second half of the current fiscal year, that you'll see, if any, visible improvement in the investment activity.
Okay. Well, there are some more statements they have made that rural wages have started rising since FY18. And of course, the government is also, the economic survey is also banking on the fact that you elaborated, Soumya, that the NPA cycle is also at its fag end. And with the MPC's accommodative stance and political stability, there should be a recovery in growth. We are being joined by A. Prasanna, the chief economist from ICICI Securities PD. Prasanna, would you say more generally the argument that FY20 should be better than FY19 is a safe assumption? 7% GDP.
Well, I would say it's a hopeful assumption.
Oh, shucks.
And to be fair, I think a lot of us thought that way at the end of last calendar year, for example. But then what we thought as a soft patch, particularly on consumption, seems to have dragged on. And of course, there have been issues in the financial sector also. So you pointed out, like it's been pointed out, I think the NPA cycle might have kind of peaked out. But it's kind of moved on from banks to non-banks. And we shouldn't forget, I think, that the leveraging in the corporate sector is also going on, probably at the promoter level. So I think all these are definitely headwinds for private sector capex. What is interesting also, I think, is at least in the last year and also in this interim budget, I think even in government spending, the focus has shifted slightly away from capex to consumption spending. So if that also continues, then obviously that's reason to believe that the investment cycle could pick up very quickly.
Okay.
But definitely, I think some expectation is there that there should be some improvement this year.
Okay. Well, just coming back to you on that consumption theme itself, after all, consumption too can drive higher growth. But Dr. Sen, on that, more generally, would you believe FY20 can be a better year than FY19 since corrective steps are underway?
No, I suspect that will not be true. I think this is the year in which the consolidation and turnaround may begin, but I don't think it's going to be better.
Okay. So a sub-7, a 6-handle GDP is more likely. Dr. Sen?
Yes.
Okay.
Absolutely.
All right. Well, Prasanna, you were developing the theory, and I can't remember which of your reports, that there have been 3 rate cuts. We've seen WPI food prices at 7%, and then of course these income transfers. Given all this, should we not anticipate better consumption in the second half?
Well, I mean, if you want to link rate cuts to consumption, obviously I think one issue is that the transmission has been very, very poor. So if you look at the way banks lending rates, for example, there's hardly any transmission which has happened. So I think the lags will be longer. So I think in a conventional cycle, what you're saying is right. So with the amount of rate cuts we have had after a couple of quarters, definitely the demand should start picking up. But I think this time the transmission has been quite weak, even by Indian standards. I mean, normally in India, anyway, transmission is poor. I think this time it's been exceptionally poor.
Okay, so it's been, I think, around a 20 basis points lending rate cut, which has been
For incremental loans. For existing
incremental
loans, not even that.
So, Soumya, actually, I wanted your thoughts on the fact that the accommodative policy is expected to help cut real lending rates. That's what's come out from the economic survey. Do you assume that we are in line for maybe one or more rate cuts? What is the cycle that you're expecting here on?
No, I think before that, I just want to add one thing. I think Lata just mentioned the increase in the WPI prices, but the last trend was that the WPI prices have actually started to significantly decelerate again. So there could be some more negative surprise on the inflation front. Now, having said that, I think there could be one rate cut for sure in August, and beyond that, it will depend on how the prices move. But as of now, possibly a rate cut in August, and after that, completely data dependent. So and possibly the liquidity surplus could continue to be in a slightly neutral mode or maybe a slightly surplus mode, which could aid transmission in the next couple of months. So that's actually what we are looking into.
Okay. Well, there are some more statements coming. I'm sorry, I'm just reading it line by line, but that's all we are getting from our reporters and from the news agencies. Dr. Sen, this may be of interest to you, and this is the first time I've heard this number being mentioned. Share of the informal sector to manufacturing growth fell in FY19. We've never seen this reported. Is this measured, share of the informal sector to FY19? And your comments on this observation that share of the informal sector has fallen?
I am not sure where they got that from, because the informal sector survey data is not out. So I have no idea where they've originated that.
Okay. Maybe it's a private study, maybe a survey. But you're not surprised by the observation that informal sector contribution is falling?
Well, of course, that doesn't surprise anybody. But the real question, of course, around that is it falling because the informal sector production is falling, or is it that the formal sector production is growing faster than the informal sector? Okay. That makes a lot of difference in terms of how the story plays out.
Okay. Well, Dr. Sen, what are you looking forward to in the economic survey at all?
Well, you see, the basic issue is that we've now got into a situation where both consumption and investment are weak. Now, this is not a good state of being because, the two of them feed upon each other. What I would really be looking for is a statement saying, how do you break this cycle? There has to be clarity. I mean, you can work on both fronts, you can work on one front and hope the other responds, but there has to be a game plan. And I think that is really at the heart of what one was expecting from the economic survey, rather than a statement which simply says that, we have 3 steps and we hope that these would help the capex cycle reverse.
Okay. A return of focus to growth. Actually, Dr. Rakesh Mohan's paper presented, I think, at the at Brookings last week also had kept this as the theme, a return of focus to growth. And how do you break the cycle when both investment and consumption are lower? That's what Dr. Sen would look out for. I think he's put the finger on the core of the problem. Prasanna, in the past, the economic survey has been the place where a lot of ideas have originated, which have later been carried on by the government. For instance, of course, RBI Capital, which Arvind Subramanian had identified as excess, and that's being taken forward. Not that it succeeded much, but we could see some money coming from there. The other idea that Subramanian had floated was basic income, and now that has matured into or morphed into a transfer of farm incomes. Are you expecting any such ideas today from the survey?
Well, I mean, one would expect that I think the next generation or next phase of reform is something the survey would focus on. Given that this is the first year of the second term of the government, I do think there is definitely some scope for on factor reforms, particularly land and labor.
Okay.
Also, it would be interesting to see on financial sector. I mean, I'm sure everyone will agree that I think there's a lot of work needs to be done in terms of the whole financial architecture we have in India. I mean, we have had problems in banks, we've had problems in non-banks. Definitely things are not working as they were intended to. So I'm sure there is scope for some fresh thinking in the financial sector also. So it will be interesting to see if there is something in that direction.
Fair point. That is a crying problem, of course, NBFC. And if I'm not mistaken, Krishnamurthy Subramanian's PhD as well is on stressed assets and the banking sector. So probably we could expect some fresh ideas over there. Shaumya, what are you expecting from the survey?
See, apart from some words on the NBFC sector, the financial sector resolution, I would also like to see if there are any ideas in the economic survey regarding the current dividends which the economy possesses and however it could be possible in the long term to take advantage of that. For example, the issue of demographic dividends, whether actually, given the current conditions, whether we are able to take advantage of that, the employment scenario. So some sort of an attention on that, because that is actually should be one of the crucial pillars of the current government in terms of addressing the existing demographic dividend, the state-wise, the issue of the creating adequate and better jobs. So I think possibly there could be some emphasis on this in the economic survey, apart from some mention to the banking sector of what could be possibly the road ahead in terms of the resolution.
One more leak which I want to present to Dr. Sen before we wind up, since we are only going with leaks. Dr. Sen, it looks like, as Prasanna pointed out, labour reforms could be attended to, and the Rajasthan would be held up as a model. Again, this is something our reporters were just picking up. You expect to hear something on labour reform? And
Almost
if yes,
certainly.
what?
No, almost certainly. The question is what? If the Rajasthan model is held up as the ideal for the country, that's going to leave me very, very disappointed.
Okay.
Because all the Rajasthan model does is it increases the limits in which the labor laws kick in.
Okay.
And that's all it does. And, in Rajasthan, it hasn't exactly proved a booming success.
Okay.
So you had a few incumbents who have benefited from it, but that's about it.
Oh, right.
So I would hope they go well beyond that.
Okay. And I know it's a tall ask. As you say, we are in a particularly unhappy situation when consumption and investment have slowed. So it's a tall task for the Chief Economic Advisor in his maiden effort, and of course for the Finance Minister in her maiden effort. But we'll wait to see more ideas. That's all we have in terms of initial observations and leaks from the Economic Survey document. We will touch base with you, gentlemen, after we get the entire document on the website or a hard copy. Dr. Sen, Shaumya Kanti Ghosh and Prasanna, thank you very much for joining us. Back to you, Prashant.
Okay, Lata, thanks very much. And Lata is going to be back at 12 when we have the full sort of document with us, which we are going to get to you in some detail. And our guests, of course, will be back, as Lata pointed out as well. 33 odd points higher, 11,949. So things have cooled off a little bit, just a little bit. The Sensex is up about just 0.25%, 85 points higher at this point in time. I think we'll take a very quick break here. We will come right back and we touch upon market technicals. What should you do at 11:30? That coming up in just a bit.